the world didn't see it coming. While Washington argued and Brussels hesitated, a quiet alliance was forming, an alliance that would redirect $3 trillion of trade and investment and redraw the global map of power. It didn't happen in Wall Street boardrooms or European parliaments. It happened in Addis Ababa, Beijing, and Nairobi. This is the untold story of how Africa and China built an economic partnership so vast, so strategic, and so disruptive that it's now shaking the foundations of Western markets. Welcome to Africa's secret $3 trillion alliance with China. 2 decades ago, Africa was still described as the world's last frontier. Western lenders offered loans with impossible conditions. Investment came slowly, if at all. Then China arrived, with a different tone. It didn't speak of charity or aid. It spoke of partnership and infrastructure. Railways, ports, power plants, and highways, projects that had sat on shelves for generations, suddenly came alive. From Ethiopia's new electric rail to Kenya's standard gauge railway, from Nigeria's free trade zones to Angola's rebuilt highways, China poured in hundreds of billions of dollars. Critics called it debt diplomacy. Supporters called it development finally delivered. Either way, the results were undeniable. Africa's skyline began to rise. What started as loans and projects grew into a continent-wide trade network. Between 2000 and 2025, total trade between Africa and China surged past $3 trillion. Chinese factories depended on African minerals, cobalt from the Congo, lithium from Zimbabwe, copper from Zambia, oil from Nigeria. African consumers, in turn, filled their markets with affordable electronics, machinery, and cars stamped made in China. But this wasn't a one-way flow. Africa began exporting value-added goods, processed metals, refined oil, even electric bus batteries. The partnership matured from extraction to industrial cooperation. Industrial parks in Egypt, Ethiopia, and Tanzania now host joint African-Chinese ventures employing hundreds of thousands. Infrastructure is the backbone of modern power, and China understood that. Through the Belt and Road Initiative, over 50 African nations signed cooperation deals. In return, Africa gained new rail systems, ports, and fiber-optic networks worth over $1 trillion. The Addis Ababa, Djibouti line cut cargo time from 3 days to 12 hours. The Lamu port in Kenya opened new shipping routes to Asia. In Egypt, the new administrative capital rose from desert sands with smart city tech coded in partnership with Chinese engineers. For the first time, African goods could move within the continent and out to the world efficiently. Western investors watched in disbelief. The projects they said were too risky were now operating profitably. Money followed momentum. Chinese development banks became Africa's largest bilateral lenders, surpassing the World Bank. In parallel, BRICS nations, Brazil, Russia, India, China, South Africa, launched new financing platforms like the New Development Bank and the Asian Infrastructure Investment Bank. These institutions offered loans without political strings attached. For many African governments, it was liberation from decades of conditional aid. At the same time, trade began to shift away from the U.S. dollar. Settlements in yuan and local currencies grew steadily. The once untouchable dominance of the dollar began to weaken, and Western markets felt the tremor. While the West debated 5G, Africa and China were already building it. Huawei and ZTE installed broadband networks across more than 30 countries. Cloud computing centers appeared in Lagos, Johannesburg, and Cairo. Startups in Kenya and Nigeria used this connectivity to launch mobile-first innovations that astonished global investors. Through the digital Silk Road, Africa gained not just cables and servers, but knowledge transfer. Thousands of African engineers trained in China returned home with skills in AI, cybersecurity, and fintech. Together, they created a digital bridge between the continents. Silicon Valley, once the gatekeeper of global tech, suddenly faced a new reality. Innovation now had an African-Asian axis. The alliance did more than build cities, it shifted power. Western policymakers began to worry. Reports from think tanks warned of strategic dependency. The EU and U.S. scrambled to counter with initiatives like the Build Back Better World and Global Gateway, but they arrived late and underfunded. Meanwhile, African leaders emphasized sovereignty. We will partner with everyone, but be owned by no one. At BRICS summits, proposals emerged for common payment systems, shared digital currencies, and coordinated trade policies that could bypass Western control entirely. For the first time since colonialism, Africa stood not as a subject of global policy, but as a co-author of the new economic order. Western critics accuse China of trapping nations in debt. Yet many African economists counter with data. Most Chinese loans are spent on productive infrastructure that raises GDP, not on consumption. Others point out that Western institutions still hold the majority of Africa's external debt and charge higher interest. The truth lies in nuance. Africa has learned to negotiate smartly, diversifying partners, renegotiating terms, and even canceling unsustainable deals. The continent that once depended on external aid is now dictating the terms of engagement. The balance of power has shifted quietly, but permanently. By 2025, Chinese investment stock in Africa exceeds $300 billion, and total trade crosses the $3 trillion mark. Africa's exports to China are no longer raw materials alone. They include automobiles, refined metals, and digital services. New industrial corridors link the Red Sea to the Atlantic. High-speed rail, clean energy grids, and smart logistics are knitting the continent together. Western analysts now admit Africa has become the fastest-growing region on Earth, and China, once just a trading partner, is now a co-architect of that rise. In Washington and London, alarms ring. Investment houses warn clients to diversify away from Africa exposure. But private investors quietly move in, chasing double-digit returns. The IMF revises forecasts upward. Energy companies scramble to secure new African supply chains. The narrative flips. What was once framed as risk is now opportunity. Western tech firms open new hubs in Nairobi and Lagos, finally acknowledging the scale of Africa's digital transformation. But the first-mover advantage is gone. The era of Western leadership is evolving. Phase 1 built infrastructure. Phase 2 is about innovation and manufacturing. Electric vehicle plants are opening in South Africa and Morocco with joint Chinese investment. Green energy collaborations, from solar farms in Namibia to wind corridors in Egypt, are positioning Africa at the center of the global cleantech race. The next decade will decide everything. Will Africa remain just a market, or will it become a maker of the future? Every indicator suggests the latter. The secret is no longer a secret. The $3 trillion alliance between Africa and China has become one of the most consequential partnerships of the 21st century. It's not without flaws, but it has given Africa options, choices that previous generations never had. Western markets are still powerful, but no longer untouchable. The future will not be written in one language or one currency. It will be written in many, and Africa now holds the pen. The story isn't about dependence. It's about independence through cooperation. A new global balance is emerging, and whether the West likes it or not, Africa has entered the driver's seat. If you believe Africa's rise cannot be stopped, share this video. Comment Africa's new era below, and subscribe for more stories the world overlooks. Because this isn't just geopolitics. It's history being rewritten by Africa, and for the world. The new Africa rising.